So you're preparing for your first audit. Maybe you've grown in size and you now require an audit, or you have inquiries coming through from the authorities or whatever relevant body in your industry, and you want to understand how you can best prepare for an audit. What are the auditors looking for, and how can you make sure that the outcome is as favorable as it can be for you and your business? Let's take a look at that. So first of all, the auditors really are looking just for a few things. They want to understand the processes and risks in your business, and they want to make sure that the information that you're putting out is accurate, so it's not overstated or understated in any way. Now, of course, they will be marking a couple of things, but they are not going to give absolute assurance. What I mean by that is they're not looking to see if every single thing is correct. They're just trying to see if there are no significant issues or significant misstatements in your business. So first of all, they probably want to understand the risks in your business. And by this, what are the risks relating to your particular business, and how are you mitigating those risks in your business? So they will look at your financial environment. Do you understand the processes in your business? Are they properly documented? Because if you understand them, you should be able to document them. And even if you hadn't, it's a good way to document the knowledge that you have of the business, so that when you hire or when you have new people come into the business, they can also continue with that same process. So you just need to make sure that you understand that process and that you can share it with other people. How they will do this, usually they will want to have what we call walkthrough. So they're going to sit with the relevant people in the relevant areas to document on their own and for their own files how every single thing is done. So who takes care of what area in the business, what controls are there, are the controls effective as well? So are they designed properly to mitigate the risks, and are they effective? So are they actually being followed? You ideally want to have basic controls working. So, controls that reduce fraud in the business, maybe controls that are showing that work is being reviewed at some form of level, access controls as well, so access to your systems or access to confidential files. Do you have that in place? And so these are the kind of things that they're looking at when they look at your financial environment in your business. So if there are limited risks, or if there are risks that are mitigated, then it is not an issue and it doesn't pose significant threats for your business or for the stakeholders that are invested in your business. Another thing that I mentioned that they want to ensure is financial accuracy of your numbers. So they're looking at the reports that you're generating and how financial statements will be produced in your business. Can these financial statements be relied upon? So if someone came to view your company statements on Companies House, can they understand and can they rely on the information that is provided? And they do this by picking samples of different things. So whether it's commissions, sales, they will pick out significant accounts that they can get samples from and test to make sure that these have been recorded accurately. You as a business, you want to make sure that you have the right supporting documentation for these numbers, because that needs to be verified. So they're going to want to verify that information. It is good practice in general that when you have each transaction in your business, you have supporting documentation. So receipts, lease agreements, any orders, any goods returns notes, that you have this in your system. It's captured correctly and it's filed against each line. So when they pick a sample, you're not going back to piles or files to try and look for the documents, because they're already numbered, they're already in the system and likely linked to each transaction in your system. So you want to make sure that you have all the supporting documentation. So they will look at this and that will verify the accuracy of some of the numbers. Now, there are some more trickier areas in accounting, or areas where judgment is applied and there's no black and white per se. Now, examples of areas like this are where you continually review, let's say, the impairment of some of your investments or impairments of your subsidiaries. Those are areas of judgment, or maybe certain provisions you're applying to leave a headroom so that you don't fall into financial troubles. Let's say, for example, you have large leases in your business, or you're leasing certain assets and you have made modifications to the units that you're renting. Likely the person you're listing from will want you to repair those assets or those leased premises and restore them to what they were when you got them. And so you want to set aside amounts, for example, and that's what is called a provision. So those are areas of judgment. There's no black and white because it's something that pertains to an event that will be in the future. Okay, so when you're looking at areas of judgment like that, as a business, you need to document how you will be treating those areas. Normally you will have a policy, or you will have a discussion between, you know, directors in the business. So you want to document how you'll be treating that. That will be taken as the approved policy or the approved resolution between the members of the business, and that's what they will audit against. So when they're looking at areas of provision, they want to make sure that when Tom comes along, he's not just going to change it because it's an area of judgment, but he's going to go back to what was agreed upon as the way of treating those areas. So those may be some more complex areas that, you know, you may want to document and make sure you'll be able to support when they ask. There are, again, other complex areas that are not so judgmental but are just complex in the nature of the transaction, so they're more technical. It could be, let's say you receive cash, for example, for work that you haven't done, especially in construction contracts. You receive cash and you haven't done the work. How are you allocating that cash? Are you saying you have recognized revenue and yet you haven't done the work? Or you're actually clearly showing that the cash that you've received is allocated to certain phases that will happen in the future, and it's stored aside in a specific account. So those are more technical calculations. It can be for leases. There's different types of standards in accounting that can be technical and be very complicated. But essentially, you just want to make sure that you have the right supporting documentation for those areas, and also that you have a process and controls around who's processing that information. Ideally, with complex information, you want to have someone who's more qualified to be looking at those areas. So let's say, for example, they're looking at those contracts that I was talking about. They can't expect to see someone in legal or someone maybe in ops bookkeeping those areas, or taking or keeping track of those areas, because they're not fully qualified to understand that, unless if they have understanding of accounting standards. So is the person responsible for those accounting areas qualified and trained enough to understand how that should be treated? And it's something that they would look at. So when you're hiring, and if you have complex transactions in your business, get the right level of expertise, because if you don't and you're trying to cut costs, you will end up paying for those costs. So if you have to correct your accounts, or you have an opinion maybe that is not favorable for your business, it might end up costing you a little bit more. So they're just looking at financial accuracy to make sure that people can rely on your accounts, and that, you know, they can make the right decisions based on the information that you've put out there to the public. The last thing I can think about is they want to see whether your business is viable in the short term. So maybe in the next 12 to 18 months, will it be a viable business? Will you have enough cash, or do you have enough leverage for the business to continue? And this is called the going concern, for those of you that know what the term is. Essentially, they want to have users of your financial statements rely on a business. So let's say, for example, you have creditors in the business. They want to make sure that the creditors of your business, when they look at your accounts, they can rely on that information, and that they will not have their money sink when the business sinks. Or if there are investors or external investors in your business, or shareholders, that they are aware that this business will not leave for another 12 months, or it will, and there is confidence. And sometimes they want you to substantiate or to back up the fact that you will leave beyond 12 months. So it could be because you have enough cash, or you have enough contracts that you've secured in the business. If you do have this, while it's not something that's maybe signed, but you have an agreement with vendors or with customers that you'll be signing a contract for a longer duration, have those records stored somewhere, and that's something that they'd want to see as evidence that you will be a viable business. And it's not just the auditors. Sometimes banks that offer you lending can want to see the support to say you're a viable business. So you just want to make sure that you can produce that information when they do ask for it, and that everyone who's looking at your financial statements can rely on the business, can rely on the numbers that they're looking at, and that nothing unforeseen will be happening. So nothing after the signing date will be happening to the business that can, or that should be known by the people reading the financial statements. So you can get through your first audit or any other audit, but it is easy for you to prepare way before the auditors come out or way before the queries come out. Just have your financial documentation, the right level of expertise, the right controls, everything documented in your business, and you should be able to get through with a satisfactory audit. It can be painful, and auditors are not the most liked people in business, but you can work with them because sometimes they do give you insights in your business on where you can improve, where you can have more robust controls, so you can work together to actually build a stronger financial environment for yourself. So I hope that was helpful and that it helps someone prepare for their first audit, or if they want to understand what to look out for, or if you're panicking, maybe to calm down just a little bit. But hopefully it just helps you put some structure in your business. Thanks for watching and good luck.